Season 2, Episode 2. Our guest today is Steven Silverman. What's up, everybody? Welcome back to the Kansas City Commercial Real Estate Market Pulse. I'm Logan Freeman with Midwest Commercial Real Estate Advisors, and today we are joined by Steven Friedman to talk about capital and market strategy and what actually matters when executing deals in today's environment. Look, we host this podcast for one simple reason: clarity beats noise. There's no shortage of headlines, opinions, or predictions about commercial real estate. What's missing is grounded market-specific insights from people actually doing the work, listing, leasing, underwriting, and closing deals nationwide. So this Market Pulse exists to cut through the national narratives, explain what's actually happening on the ground, and help you, owners, investors, operators, and brokers make better decisions with real data and real context. Here's our team, and this slide matters because the Market Pulse isn't just a podcast. It's a strategic tool for our firm. Every episode does three different things. It sharpens our own market understanding. It positions us as brokers, as local experts, not order takers, and it creates consistent, high-trust touch points with owners and investors. And I get to speak to some of the top commercial real estate owners, principals, developers, and brokers, lenders in the country. So it's a very awesome platform for me as well. If you're interested in talking about Kansas City commercial real estate, here's our team. You can head over to www.mwcreadvisors.com. We've got 3 new listings coming to the market here very, very soon. But without further ado, I want to get to our guest, Steven Silverman. I said Steven Friedman earlier. I apologize. Steven Silverman, and I know that because we've known each other, but I read Friedman. He's with Friedman Real Estate. Steven Silverman has transacted on more than $500 million of commercial real estate, which represents over 15 million square feet nationwide. He specializes in the acquisition and disposition of investment-grade real estate assets, including single and multi-tenant retail, apartments, industrial, office, hospitality, self-storage, and mobile home and RV park properties. Steven's also recognized as an expert in stabilized, value-add, and distressed property auction sales. He's received multiple CoStar Power Broker Awards, CRE Platinum Broker Awards, and was named a top retail expert for 24, 25, and I'm sure going to be 2026 by Rethink Retail. He's also an active member of the International Council of Shopping Centers. Steven, how's it going, man?
It's going great. Always good to see you. Always good to talk to you.
Well, we really very much appreciate you being here. I'd want to just give some listeners some advice here. Steven, I want you to talk about your background here in just 1 second, how you kind of got into commercial real estate. We'll keep it short.
Yep.
But we've already got a number of listeners here. And I'm sure there's some people out there wondering, man, I wonder what it's like to be a commercial real estate broker. You are somebody I like to follow on LinkedIn. It's where we first connected. You put great advice out there, but you keep it real. So why don't you keep it real with our audience today? Hey, I forgot, if you got questions, comments, drop them in the chat. Our team is watching that. I will be messaged when questions do pop up. So please do send them my way, email, text, Katie, myself, drop them in the chat. We're live here on LinkedIn and on YouTube. But Steven, man, what was it like getting into commercial real estate for you?
It's kind of crazy. This is going to be my 10th year. When a lot of people find out, when they talk to me, I guess I sound older on the phone than I do probably in real life. I'm actually only 35. I say that as if I'm still like a baby, but
you're same age, man.
Exactly. 10 years ago, I was really right before that. I was consulting for a technology firm out of Chicago, and I knew always that I was into more of an entrepreneurial / sales oriented job that I like. That's what I always wanted to do. It's what I grew up doing. And there was an opportunity to move back to Detroit. I had been around the Friedman family my entire life. And the now co-CEO of the company, Jared, basically approached me and said, "Hey, would you be interested in coming back to Detroit and brokerage, and I didn't know that much about it. I'd been around residential real estate earlier in my life, but didn't know really what it entailed. And I started out as an analyst for about 3 months or so, and was working on BOVs, or broker opinion of values, and building OMs. And from there was like, I think I can do this, and started making cold calls and transitioned into the brokerage role. And 9.5 years later, I guess you could say, because the first 3 or 6 months I was on the analyst side, really started brokering deals and never looked back.
Yeah, absolutely. Well, you're a powerhouse in our industry. I appreciate you always keeping it real on LinkedIn, talking about what real estate brokerage truly is, right? Because I think a lot of people do see, all the just close and the big transactions and, 50, $60 million deals. And they're like, man, I'd love to get a part of that. But it is so much more than that, right? It is so much more than that. We are, and this is from Bob Knackle, but we are in the information and relationship business, right? And something that I've been studying here recently, Steven, has really been this what I'll say shift to real estate owners are becoming younger and younger, and they are engaging in different places, right? They are engaging online. And I have been able, and I know you have been able, to leverage digital marketing and social media to really impact your business in a positive way. However, it is not a business that we become influencers on. We still have to be true advisors. We're still making that cold outreach, right, on a regular basis. And we still have to generate business and then perform on that business. But would you speak to maybe how digital marketing, social media has really transformed your business from when you got started 10 years ago to where it is today, man? I got to imagine there's been some big leaps and bounds.
Yeah. I guess probably based on age, right off the bat, when I started, I found that there was a huge disconnect in between utilizing technology, especially on the brokerage side, in terms of advertising properties and connecting with buyers and sellers, versus just cold calling people. I mean, we continue to do that on the prospecting side for generating listings. And I think that'll probably go on for a long, long time. To your point, it's probably going to always remain relationship driven in that regard. Really on the sell side, or reaching potential buyers, whether that's using a database, through email marketing and or utilizing a LinkedIn, or, I'm just going to use Crexy as an example, advertising properties that way and being able to call owners and pitch deals that way. If you're not leveraging technology, I don't know how you're going to continue to stay in the forefront, of deals going forward. And really, to your point, with buyers getting younger and younger, I'm trying to figure out, like, what is that going to look like, into the next generation? Are people going to be buying deals on TikTok? Like, how
Right.
are we going to stay in front of them? Especially with this huge wealth transfer that's going to take place over the next 10, 15, 20 years. I think just the way deals get transacted is going to look a lot different than it is today.
Absolutely. Well, man, I mean, I couldn't agree more, but like, you have averaged $50 million in volume for the last 10 years. And I'm sure that at the beginning it potentially wasn't as much. So maybe you've had some even bigger years, but that's really consistent, right? Just the average 10 years, over $500 million of real estate. There's very few, I think, brokers out there that can say, I'm right there with you, man. I've transacted right around 500 million. So I think we're in rare air here, right? Because a lot of folks get in, they fall off, they have a good year, they take it easy, but consistently delivering that type of volume, it takes a very unique approach. And what I have found is being able to start with cold outreach and being willing to do it. That turns into warm outreach because you're building your network, right? Then you start posting free content as your network builds, and then you're generating some inbound leads. And then there's, paid advertising that you can do obviously now as well. So those are kind of Hormozy's core four of how to generate leads, right? Yep. And I think that as a real estate broker, I heard somebody say the other day, I'm not in the real estate business. I'm in the marketing business, and real estate is my product.
Yep.
I thought that was really unique. What are your thoughts on that?
I think that's huge. And it's funny, especially when I know we're going to talk on it or touch on it. When we talk about auction sales, I frequently tell prospective sellers, hey, like, you're hiring me to broadly market your asset to the widest possible, pool of buyers out there nationally, you're hiring me really as a marketing professional more than anything else.
Mm.
And I think that tends to be the case across the board, right? Like, it's funny, since day one, I have saved every email address and put that into an Excel spreadsheet. And that's how I've built just my massive email distribution list. And I actually don't have it segmented based on asset class outside of, like, we usually only market an RV or mobile home park to that asset class. But for instance, if I'm advertising an office building, someone that looked at or bought a retail property from me 8 years ago is getting an email from me, even on the office building. I have no idea where the buyer's going to come from, right? If
Right.
31 seller, that just sold an office building who wants to buy a shopping center, and vice versa.
That's right.
But it's funny too. Outside of spending money on a Constant Contact or a Mailchimp account, I haven't spent any money on, say, LinkedIn. I mean, that's all free. It's funny how you can really build a brand now and be recognized nationally with very little to no marketing spend. And I think most people are shocked when they hear that. They're like, wait a minute, like, you're not spending all of this money on getting known. And it's not, you just got to be consistent with it at the end of the day.
Yeah, absolutely. Well, one thing I want to key in on is you said when somebody hires me to advertise their property, right? That's very different than I think a lot of people think about this. Well, let's get into it, man. Let's get into why we're in this real estate cycle. As we head into 2026, how would you describe where we're at in the market cycle? And, where do you think investors are still either misreading or capturing this moment? Like, what does this feel like for you right now?
Yep, I'm looking at your slide too, and I think that really touches on it. I think we're clearly in a new normal. Unless something really breaks, I think we're going to see, we're definitely range bound in terms of where interest rates are. Even with rates coming down from the Fed's funds rate, the cost to borrow is down. It's not down, substantially. But I think people are getting more comfortable there. Buyers are understanding how to underwrite a deal. They're understanding where cap rates are. I do think that, and we're hearing this in conversations with sellers. They're like, oh, interest rates are coming down. That much must make my property worth more. And I think that, when you look at the spread on what banks are charging from what their cost of capital is, they're still pricing in a lot of risk in the marketplace. I do think 26 should be more active from a transaction volume than 25. I know 24 was probably one of the worst years just industry wide that the industry's had, for 10 plus years, and 25 was significantly better than 24. I think we'll see, uptick in 26 over 25. I don't think it's going to be like 21 or 22 when interest rates were, zero. But, I think, I'm reading this, rates still elevated. That's for sure, the fact. Pricing realism is improving. I think we agree there. And the big ask gap is definitely narrowing. And I think, as brokers, we need to be careful to take on deals just for the sake of listing. I posted about it yesterday that I tell people you should, I am actually a big proponent of just listing everything. But when I say listing everything, it's stuff that I say yes to. You need to also be able to say no. And not just on a listing when it should be trading at a 7 or an 8 cap and the seller wants a 5.
Yeah, absolutely. Because the only thing that we have to value as brokers and entrepreneurs and business owners is our time,
100%.
right? And we had to say no to a deal that was out of market and it was overpriced. And until the anchoring really hits the realism, and unfortunately, he went and had an appraisal done and it gave him this price. And it's like, look, I get it, but you've got negative net absorption of 64,000 square feet in your market, right? If you're talking about an owner user, I just searched Crexy and there's 9 buildings between 2,500 square feet and 33,000 square feet that they can go buy at way lower than that appraisal value. So like sometimes the market speaks and it speaks volumes in regards to what you're going to be able to get. So I completely agree. Just to put the Q4 data is not out yet that I have seen, but in Q3 of 2025, nationally, over $150 billion of real estate was transacted. If you normalize and annualize that, that'd be about 600 billion. Well, that puts us way back to like pre-2020 levels,
Yep.
Which would be really, really good. Now, I don't think we hit 600 billion in 2026. I think we're closer to 500 to 550 billion dollars, but that's still substantially up from previous years. And so I think that's where we're going to land. And it's very important for people to understand that we have discretionary sellers who are thinking that this is a good time to sell. And then we have non-discretionary sellers with $965 billion of commercial real estate debt that are going to have to refinance, restructure, or sell. So that alone is going to push people to transact, right?
Yep.
And so the question you need to be asking yourselves as investors, as brokers, as owners is, where am I at with my debt service? When does it come due? How long do I want to own this asset? And then if you're a buyer, or you want to be ready. You want to be ready to capture some of those things and be able to execute. So I think that we're pretty well aligned in kind of where we're at in the cycle right now. Absolutely. So moving on, man, I do want to see from what you're seeing on the ground, what types of assets are really trading right now and which ones are getting stuck. And I'm just looking at my email right now, and I'm pretty sure you've launched either 3 or 4 deals over the last week, because Steven Silverman is all up in my inbox. And I'm seeing deals that are, I think, neighborhood retail or maybe retail. Yep. I'm seeing RV parks. I'm seeing all kinds of stuff. So, I mean, what are you seeing on the ground? What's actually trading right now?
I think the reality is everything's trading. Stuff that's still slow is for sure on the office side. I think that's going to continue to be slow, but it's not zero. Lenders are still playing in the space. They're being more careful, but stuff that is priced right is moving. Retail's for sure moving. It's
yes.
Down. There's very little vacancy in the marketplace nationally, and people are looking to get into retail as much as they can. Industrial obviously slowed down a little bit just from what post-COVID to where we are now, but still very hot. The mobile home park space and RV park space couldn't be, we are selling every deal that we bring to market. It's crazy. And there's so much interest in that space. And I think that's going to continue. And everything kind of in between. We're bringing out a couple of hotel deals here in the next week or so. There's concern in terms of what's happening on the hotel side. I think that's somewhat similar to what's happening on the multifamily side. Rents are clearly not going up the way they were, in 21, 22, 20. We're seeing some softening there. But like anything else, if deals are priced right, there's a huge pool of buyers looking to place capital right now.
Yeah, when you're working with an owner, and obviously you have $500 million worth of real estate to be able to compare this to, but like, how are you coming up with realistic pricing? I mean, you're national, right? So you're doing deals across the United States. So talk to us a little bit about that valuation strategy and how you're coming up with realistic pricing, right? When an owner says, well, I think I can sell this at a 6% cap rate, when it clearly the data shows it's a 7.5% cap rate, that could just be a no. But like with you across multiple markets, how do you and your team really evaluate those assets for owners?
Yeah, it's a good question. Obviously, if it's a single tenant property with a national credit tenant, obviously we can pull those comps pretty easily.
Yep.
There's 2 deals that we have that are neighborhood shopping centers in Milwaukee that we're listing and marketing right now. That's a function of, it's tough. You've got mom and pop tenants in those 2 shopping centers. And it's not easy to pull comps, as a result of that. It's funny to say, like, there definitely is a smell test to this. Like, once you've done this enough times,
yep,
start to tell, like, if a neighborhood center is priced, with shorter term leases, south of a 9 cap, you're probably not going to get that much activity. So we price these at a 9 flat, right? If a seller in that situation was like, I'm only going to let you take these out at an 8.5, but I've got some room, that's a listing we probably would take. But if a seller, on a deal that I think is going to price closer to a 9.25, says, I would let you list it for an 8, but don't talk to me unless, an offer is somewhere between an 8 and 8.35. That's the type of stuff that, we'd be very cautious on.
Yeah.
It's in a lot of cases, it's not necessarily a no, but it's a not yet or a later. There's plenty of deals over the years where we follow up with owners, monthly for 2-3 years, and eventually their pricing objectives or whatever their objectives are in terms of why they want to sell become more realistic than when our first touch point is today. And a lot of our deals have been completed as a result of that. I don't want to get into the business of having inventory for the sake of having inventory. As we don't get paid on just having listings. If anything, right, money that way. So it's not always a no. It's a later, and just being cautious for our time, because that's all we have at the end of the day.
Man, something that I continue to see is like man, insurance and taxes just be blowing deals up, right? Like, yeah, your net operating income on your T12 might be 256, but like truly, when somebody goes and reprices this insurance, they get repriced on taxes. Man, this is wild. I was
Yep.
just working on a neighborhood retail shopping center in Kansas City, and this guy bought it 5 years ago. Okay, and taxes have gone up $20,000 in 5 years. I don't know. And it's a small property, right? 15,000 square feet. And he's paying $45,000 in taxes a year. Man, that just seems wild. So, now the tax scenario, I'm not too concerned about because it's already been full freight, right? Like that's not going up whenever you sell this deal, probably. However, the insurance side of things, man, I'm seeing quotes anywhere from 25 to 50% higher. And so truly an NOI that you currently have is not really that. So that's another obstacle. And that's why we put on here the seller bid ask gap is narrowing. But like that's another obstacle that we as brokers and advisors have to kind of work through when we're talking to owners, because yeah, your NOI is 256 right now, but day one, they turn around, they lose $30,000-$40,000 of that NOI, right?
Yep.
So how do you approach that in the marketplace? Or do you just write that in?
Yeah, I tend to, when I'm giving someone a valuation, they'll send me over, say they're 12, a T12. I'll usually present an in-place NOI that shows what true future day taxes look like and insurance, so that we can have those conversations off the bat. It's funny though, most sellers, like they don't want to face that, right?
Right.
Well, my property is performing how it is today. I don't care how it's going to perform tomorrow, even though the proof's in the pudding. We know where taxes are going to go, we know where insurance is going to go, and it's only going to go up. And I think, when you look at it, $500 million in sales, it's probably higher than that. I got to actually, look into that number and see what it really is. Of those numbers, how many people did we actually, like, I've probably have called on $2 billion worth of real estate and maybe did 800 million and sold 500 million. And probably that 500 million worth of transactions is worth of sellers that are willing to be realistic. And there's $1.5 billion that we called on that a seller just was not interested in selling based on what the property was truly worth today and as to how the next buyer is going to underwrite the deal.
Yeah, really good point. Really good point. Hey, we got a lot of lurkers right now in YouTube and LinkedIn. We are live, so drop your questions into the chat. We're monitoring them. I see you all lurking in here, watching Steven and I having a great conversation. Thank you for being here, but definitely put your questions in the chat. Don't be shy. We're here to talk about it. Now, Steven, something that you do that's a little bit different out there from a lot of other brokers is that you work with auctions. So, I mean, and there's still kind of a perception out there that auctions automatically mean distress. But like, how do you explain the difference between an auction sale and a truly distressed sale? And when does an auction sale actually make sense?
Sure. So I think this is probably my biggest differentiator amongst, what myself and my team does or do versus the competition. So I would say 50% of my business is probably in the auction side of the world. And then the other 50% is just traditional investment sale. We as a firm, dating back 15, 20 years now, we're extremely active working with lenders and servicers, et cetera, especially a great financial crisis well before I was in the business. When I originally came in, and we have a debt advisory and auction business, just an entire arm tied to that. This was 10 years ago. There was conversation of, we really would like a young broker to learn this side of the business. And I always, for some reason, like I used to love eBay well before I was in the business. Like I was used to like understanding how reserves work and like placing bids and like negotiating buy it now prices, like the whole 9 yards. So I had a knack for it. And historically, as I mentioned, we always worked with servicers and lenders. I said, well, why don't we take this side of the business on higher cap rate or value add deals and offer this to third party or private sellers to sell their real estate? And that kind of started 6 months into me being a broker and has never stopped.
Yeah.
It really is a great strategy for value add product, for higher cap rate product that you may get retraded on traditionally, or that has some hair on the deal, maybe in tertiary markets where you're not going to be able to get the buyer pool that you should be looking, that you're otherwise going to be looking for or trying to get. And so we've identified, various platforms to sell real estate for sellers that are willing to give up a little bit of price for execution on their real estate, hard contracts, 30, 45-day closes, and it's worked out for us, nationally across asset classes.
Absolutely.
It's going to continue to grow as a way of transacting real estate. To your point, there's definitely still a negative notion to, oh, I'm taking it to auction. There must be a distressed side to this. I think that'll change as we move forward. I talk to people about this all the time. I have an issue with why someone needs 60 days of due diligence and 60 days to close on a single tenant property.
Right.
I think as technology moves forward and as our generation continues to grow wealth and become, buyers of real estate, we're not going to need that type of timeline to move assets. And so whether it's auction or like a digital marketplace to sell real estate, I think that's going to continue to be at the forefront for where this goes.
Absolutely. Yeah. Well, I appreciate the first question that finally came in, and we got more and more lurkers. I'm seeing them. I know you can't see them. I see them. I see them. They're coming in. But you answered it. It was what types of owners or situations benefit most from an auction approach in this market. I think you hit it right on the head. I mean, you heard the question or saw the question before it even was on there. Now, Richard Hall is saying, what auction platforms do you prefer? And do you go straight to auction or open marketing, then followed by auction? Thank you, Richard Hall, for your question. Thank you for being here. Very much appreciate that.
It's a great question. I'll answer the first part first. The first part's easy. There's only a few auction platforms that are out there. There's Real Insight Marketplace. There's 10X, which is owned by CoStar now. There's Apex Exchange, which is new, which was started by someone that was recently at Real Insight Marketplace. And then CRE has also gotten into the space as well. If we want to talk offline, I could talk about the pros, the cons, etc. The second part of the question, do I go straight to auction or open marketing, then followed by an auction? It really depends. There's some times, and it's funny, the deal that we're working on, or two deals that we're working on in Milwaukee right now is a perfect example where we brought those to market before the holidays. We were actually under contract with a 1031 buyer. The 1031 fell apart, and we decided let's go to auction with it. We recognized there was a huge buyer pool, and tons of people, calling on us, emailing on us. And I said, let's just let the market bid on the asset. We're probably going to get to the same number we would otherwise, if not more, just based on the amount of interest. So that was an example where we're going open marketing, then to auction. But yes, there's plenty of instances where, we identify a property that just makes sense off the bat to go to auction, and we'll run it that way versus having any type of traditional marketing process ahead of time.
Great response. Really appreciate the question, Richard. Thank you so much. I heard you mention 1031 exchange buyer, the holy grail, but also probably the most big thorn in all of the broker's side, right? It's like this double-edged sword because yes, they have urgency and they can move, but they never tell you that they're looking at 15 deals across 25 markets. And yeah, your deal is going to be identified and then it's not, right? It's like one of those deals. But I am curious, from the buyer behavior that you are seeing, how has that shifted since the 2021, 2022 environment? And, what separates some of these buyers who are getting deals done who, from the guys who aren't, right? And I've talked at lengths about, you should go read multifamily. If you're in multifamily brokers and investors, multifamily investors who dominate by Bo Beery. I mean, if you want to be front and center with brokers, there's your game plan. But I am curious from your perspective on how any behavior has shifted from the last 2 to 3 years that you've been operating.
I think the biggest difference that we're finding is there are far less first-time buyers than there were before. A lot of our client base is repeat business. And that makes sense, right? I think there was a flush out in the market, and there probably continues to be just where interest rates went. And so there's people sitting on the sidelines versus your more so experienced or professional investors, always looking for deals. And when they can find arbitrage, or they already have, established relationships on the lending side, they're continuing to buy. That's first off. Second off, just based on transaction volume being, down, in comparison, the 1031 market was quieter than it had been in years past. And so I think that had a real reason, a stark reason in terms of why transaction volume was down. But to even touch on 1031, I'm always cautious on the sell side to go under contract with a 1031 buyer, especially given why, what you said. You never know, you can identify up to 3 properties. I don't know for certain, and they're not going to tell me for certain that I am at the forefront of that. We
Right.
are representing buyers on 1031 exchanges. It is not uncommon for us to sell an asset for someone and then represent them on the buy side. But when someone calls me, one of my first questions on a listing that I have is, are you in a 1031? And that really is right off the bat. I want to know how they're comparing this potential deal to the other stuff that they're looking at.
Yeah, I think so many people hear 1031 exchange buyer and they say, "Ooh, they're going to pay the most of it, right? Most for this asset." And your experience and my experience is quite different.
Yeah.
Don't get me wrong. I have done a lot of 1031 exchanges and they've worked out, but you do have to qualify them heavily, right? And I think, we're negotiating contract on some land right now, Steven, that's going to be built for, a small bay industrial site. Awesome project. And they had some language in there that mentioned it could be a part of a 1031 exchange. And I recommended that we find out, is this, a part of that, and actually remove that from the offer. So like there is no contingency or anything around 1031 exchanges, right? I mean, how it has shifted, man. But as a young broker, you hear that and you're like, oh yeah, let's go. Come on.
You're spending the money before it even closes.
That's exactly right, man. Well, I appreciate that. Let's talk about the seller reality checklist, right? I mean, what's the biggest reality check that sellers are facing right now, right? So like, what are they having to really understand about the market that might be, distorted from their perception? What's this reality checklist that you've got?
It's a good question. I think a lot of it, and you have it on here, is price discovery. I think that there's a lot of sellers that think they know what their asset is worth without having any idea what their asset's worth because they haven't tested the market. A lot of people are relying on appraisals that may show the property is worth, on paper, 30% more than it's worth. I have a very negative opinion as it comes to appraisals overall, and we could talk about that. But I think that I always tell a seller, and I am probably well known for taking on listings in a very short period of time. I'm all for a 90-day, 120-day listing. You usually will find in the marketplace like a buyer, if you're priced right, like out of the gates. And if you're out there for a long period of time, there's usually a problem, and the problem is usually price. And so, you have on your motivation over timing. I think that's huge. So if a seller tells me I would sell for this number, but I don't have to sell, that's a problem to me. Like there's a red flag in the seller reality checklist there. You brought it up in the beginning too. I don't need the seller to like coach me on their asset. Like we've done this so many times over again in a very respectful way, but you're hiring us as the professional to market and negotiate on your behalf. You run into sellers sometimes that pretty much think they can do it better than you can. And I've never said to the seller, well, why don't you just do it yourself? But if you kind of have that attitude to a seller reality check, like if you're trusting us with the sale of your property, trust us. We have a fiduciary responsibility to represent you, but let us do our thing.
Absolutely. Well, a couple things that came up. Saw my buddy in St. Louis post the other day. He said, I just got back an appraisal for a neighborhood retail shopping center with national tenants in St. Louis. And one of the comps on the appraisal was a mom and pop grocery anchored shopping center down in Lake of the Ozarks or something. Right. Yeah. Yep. I mean, I thought that was hilarious. Jake Clayman with Clayman Commercial. Yeah. I think it's his last name.
Yeah, Jake Clayman Commercial. Yep. It was Jake.
Yeah, man. That was a great post. Right. And so, man, let's talk about this let's double click on this, because I'm so interested in this, man. Like with where AI is and the ability for residential appraisers to utilize AI, right? Like there's valuation AIs that can get appraisals back on residential houses now, because everything is a uniform code standard and the properties are, put on the MLS and you can get the sales data. You can appraise a property in like a day now, right? So like, what is the commercial real estate market waiting for? Why is that not created? Is it just lobbyists? Is it big companies that own this stuff, big brokerages that own the appraisal companies that are saying, nope, we've got a value? Or is there truly nuance that we cannot standardize commercial real estate appraisals? Or is there an opportunity for some tech company to come in and work with a brokerage firm to figure out, you put all the information in, you get pictures, AI looks at the pictures, we look at it all, and you're going to get an appraisal in 7 days, man. I got to believe this is on the forefront. Right?
if that's not being worked on, then I think there's a huge opportunity in the prop tech space to go after that right now.
Yes. Yes. Yeah, I couldn't agree more. And, somebody did reach out to me on LinkedIn. I will set up a meeting with you. I forget the guy's name, but he's saying that he's got it. And he's been an appraiser for 15, 20 years. So I'm super stoked. Wish I remembered your name. You're in my DMs. I sent myself an email. I'll be in touch. But I just think that is such a big opportunity. So what I'm doing, Steven, and maybe what you've done over all of our brokers, if they get a deal done, go get that appraisal. If you can, go get that appraisal, right? And I'm aggregating. I've got 15 of them now, right? Just from the last 3 or 4 months that I'm putting into a folder on a Google Drive. And I'm going to try to figure out if I can build a custom GPT. I'll be reaching out to you, Topher Stevenson. Yeah, I'm in the CRE AI mastermind and group. Fantastic group. Shameless plug. He's phenomenal. Just really cool stuff happening in that group. But can we create our own valuation GPT that at least gets you, halfway there, right? With these valuations. So anyways, very interesting topic, something I think is going to be taken out. Richard is back with another question. While it's probably a bit of everything, but what tools and strategies have we found to helpful to close that bid-ask gap, right? Traditional BOV, if comps are available, band of investment approach, more nurtured relationship and trust, or even AI use? This is a great question, Richard. I'm going to lob this one over to Steven, see what tools and strategies he's found helpful right now.
It's a very good question. I think, it's kind of twofold in terms of when I think of just bid ask gap, I try to bring 3 or 4 offers and let that do the talking, right? I think, real market data gives the best value to a seller. A BOV can only get you so far. You're usually using BOVs before you even go out into the marketplace. Comps for sure are very helpful, especially if you can show comps plus 3 or 4 offers that you're getting and marry those two together. I haven't used AI yet to bridge that gap. I think that's an interesting point that Richard brings up. But auctions that he speaks of specifically, there's no better way to show what the bid ask market looks like than an auction. You're getting the most transparent real-time data that you possibly could. Assuming you have 5 or 6 bidders, if not more, participating in auction. That's going to show you, the easiest way to close a bid ask gap. And I think sellers appreciate that.
Absolutely. Richard, just to add, I use super agents. I'm using GenSpark to do deep research. And here's a prime example. I'm working a lot of deals in tertiary markets. So Western Johnson County, Western Kansas. And, those deals are hard to price because there's not a lot of comps available because there's just not that much supply and they don't trade hands, right? However, I was able to find through GenSpark's deep research functionality an appraisal that the Department of Revenue had actually done for Kansas. And they did an actual appraisal around all of the different submarkets and gave really good operational expense ratios. And I thought it was pretty dang good. I mean, because it anchored around an 8% cap rate for these tertiary multifamily markets, right? And it gave some comps and things like that. So I don't know. I mean, I don't know exactly your use case, but I would definitely look into prompting AI to do deep research and sending you the resources and the links that it finds. I have found so much around that. Also, if you're working on a real estate property, do a Google search on this thing and hit news and hit just Google search. You might find that the dang thing's already listed. How many times have that happened with me? Owners talking to me, really want to sell this deal. I start working on this thing and I don't do a Google search. And I was like, oh, it's listed. So my first order of business now is going to GenSpark, having it do deep research. When was it last listed? What can you find about this property? And man, that has been so helpful. So Steven, if you're not using deep research on any of this stuff, man, it's been wild to see kind of what we've been able to find out about properties and owners before giving them a BOV.
Sure.
Love that. Okay. I do want to talk a little bit about, investor psychology around underwriting, right? So where are you seeing investors being more conservative today than they maybe have been previously, right? And maybe that's going to create some opportunity, but like, what is, if anything stands out to you in regards to, oh man, insurance for, multifamily. I know you don't do a whole lot of multifamily, sure, but maybe you do. But was like $400 per unit 3 years ago. Now it's like everybody's underwriting $750. Anything stand out to you that people should be aware of?
I'll tell you, retail specifically, we're finding this where most people historically would underwrite an option being picked up that's already in the lease. So let's assume that someone's paying $50 a foot right now, and then at the end of a 10-year period, the renewal calls for the lease rate to go up to $20 a foot. Right now, every tenant that I know of is going back to the landlord and saying, hey, I know what it says in the lease, but we're going to renegotiate our rent if you want us to stay. And they have a lot of leverage. And so it's tough, in a OM, you may see, a 5-year projection, and every year you see the rents going up. But the reality is, if someone has a renewal or an extension option in there, their rent may not look exactly what the lease looks like. So that's one big, I'd say to look out for.
Well, on the retail side, Steven, let's double click on that. I mean,
Sure.
Most markets are super tight, right? With supply, and there's a lot of demand. So why do the businesses, why do the tenants have so much leverage right now?
Because I think if you look at construction costs and TI and commission, et cetera, the cost to replace a tenant who, may be bluffing, it's very expensive to go and rebuild out a space for another tenant to pay commissions, et cetera. They rather take a discount on rent or keep rent flat to what it is now than to have to go and backfill, even if there is demand in the marketplace, because no one's taking space as is, especially the national tenants. They're looking for very attractive TI packages. And so I think, landlords are saying, I'd rather continue the relationship that I have with this existing tenant, even if I have to put a reduction of rent in place.
Yeah, well, that's really interesting. I didn't think about it like that. The other component that I wonder is happening if there's more and more sophistication around these businesses, and maybe they're getting advice from other brokers in the industry saying, hey, you can go negotiate your lease, right? So yeah, that's a really good point. Thank you for bringing that up. Just real quick, Richard Hall says, thanks. You got it, man. Thank you for being here. Very much appreciate that. Okay, let's talk about investor takeaways and some final thoughts before we move on to the quick takes with Steven. Steven and I both talk really fast. So even though it's only been 41, 42 minutes, you get a lot of information from us because we're speed talkers. Okay. But for investors and operators looking ahead to the next 12 to 24 months, what do you think they should be focused on right now to put themselves in the best position?
Yeah, I think, these are good notes that are on there, but I think focusing on the fundamentals is very important. Unless something breaks, as I mentioned, in the economy, I think that we're very much range bound in terms of where cap rates are and where interest rates are. I think we will see some compression on the interest rate side, and we should see some borrowing options, come down a little bit. But I think, not necessarily holding out to hope that your property is going to be worth more. If you're planning on selling, this is actually a good time to do so. There's not a ton of competition that's in the marketplace right now, especially that we're seeing in the Q1 and Q2 side. And I think that, being transparent and telling your broker or just anyone that you're working with in the industry, being upfront with them on what you're trying to accomplish on the buy side, on the sell side is really important. Versus, historically, I think this industry has been very much like close to the chest and not exactly showing your cards. I think the more you can provide to a representative that you have working on your behalf is really important, and controlling what you can at the end of the day. There's a lot of, external factors that comes into this business that you can't always control, but, operating a property to the best of your ability and, just being forthright with the way you operate is really important.
Absolutely. Yeah. Tim Grover says it well. He says, control what you can control so you can manage what you can't. Right. Yeah. I love that quote. Love that quote. Favorite section of our podcast is learning a little bit more about you, Steven. So right now, do you have a favorite book or podcast that you're diving into?
I don't read a ton. I should read more. I read a lot of articles. Podcast wise, I've been listening a lot to Kyle Matthews' podcast that he puts out. I find it very interesting. He's been interviewing a lot of interesting people in our industry and outside of our industry. So that's got me very interested.
Yeah, Matthew's mindset, I think, or mentality. Yeah, it's a good one. I enjoy that a lot. Well, to have Kyle on the podcast this year. All right. Best advice for buyers in 2026. What do you got for them?
I think 2026 is still a good year where you can not necessarily have to take the asking price into account, and based on what your future underwriting is, offer accordingly, put a lot of offers out there. And, you don't have to overpay. It's not like residential where you're going above asking price. I think, you can be conservative in your offers and staying true to your fundamentals.
Absolutely. Anything that you would point people to say this is the most overlooked part of the deal? Like, what do people just gloss over and they're just like, oh, yep, moving on? That you're like, man, I figured that would have been a lot more due diligence on that front. Anything to stand out to you?
Roof condition in the winter. I think, especially in the Midwest, you got a lot of roofers and roof inspectors that don't necessarily want to get on a roof, and so it's very difficult to actually see what a roof condition is. It may not be leaking through yet, but come spring, you may have issues when there's compression in the roof condition. We talked on it a lot. Insurance. Don't expect insurance to be the same. Don't assume that property taxes are going to be the same. Whatever you can't see right now in the winter is going to look a lot different than it is in the spring. That's the reality.
Absolutely. Steven, thank you so much for being here, man. You added so much value, so many good nuggets for folks to look into. If they want to follow you, get on your email distribution list. Point them in the right direction, my man.
Shoot me a message on LinkedIn. That's an easy place to find me, is Steven Silverman. And of course, my email address, steven.silverman@freg.com. I'd be more than happy to add you to my email distribution list, and always happy to answer any questions or just have a conversation about real estate.
Amazing. Really appreciate you, man. If you're interested in Kansas City commercial real estate, ready to get started, do the same. Find me on LinkedIn, shoot me a DM. You can go to our website, www.mwcreadvisors.com. Thanks, Steven, again for being here, man. I really appreciate your time. And thank you for all the listeners who listened in. I saw we had a ton of lurkers out there. I'm going to keep poking you and make sure that you continue to put your questions in here, because we've got some awesome people on this podcast and you got them live here. So make sure, don't be shy. Drop your questions and comments in there. If you didn't get to them or you just want to send Steven an email or a DM, find him on LinkedIn. You can do that as well. Steven, appreciate you, man. Thanks for being here.
Thanks, Logan.